Good morning. This presentation is conducted by Nada Abdu, Omar Atif, and Mariam Khalid. We will be talking about digital banking, and we will discuss how digital banking has affected the way banks do their business and improved its business processes and attracted more customers. First of all, let's define what digital banking is. So, digital banking means the full digitalization of banks and its activities, programs, and functions. And it's not just about digitalizing your service and products, the front end that customers see, but it's also about automating your processes, which is the back end, and connecting these words with the middleware. Digital banking is about the automation of every step of the banking relationship, and it goes way beyond an online or mobile banking platform. So, in this intensely competitive world of financial service, companies are looking to win customer favor by designing more innovative channels for online and mobile banking. Consumers today want to manage their money quickly and efficiently, and mobile solutions provide that functionality. It is extremely important for banks to abide by digital banking in the modern world to keep a competitive edge in a highly competitive environment. So, digitalization has changed many elements within every industry, especially the financial industry. The new technology wave that has started throughout the entire finance industry has changed a lot of banking structure that were traditionally set up. Automation is one of the biggest focuses that banks are looking at because technology is increasingly growing. Banking solutions have changed drastically since the introduction of online banking options. There are many options to withdraw money, deposit checks, or transfer money without going to the bank with technology advancement. All this has revolutionized. Factors such as online banking, ATM machines, financial integration, and 24-hour access have changed the outlook for why there is a need for digital banking in order to meet customer satisfaction and meet their convenience. Digital banks offer banks' core products through an online platform that links between banks and consumers. So it has the same function as the head office and on-ground branches, but it's offered on virtual platform for consumer to access. Automating a bank's business transaction adds a competitive edge to the bank and allows it to widen its customer pool. So one of the main characteristics of digital banking is that it offers solutions along with the online system in order to reduce human error and mitigate banks' risks, such as operational and fraud risk. So digital banking has transformed the way banks do their business and has offered a number of benefits. I'll be discussing some of these benefits with you. The first and the main benefit that digital banking has offered is that it made banks more efficient. So digital banking has managed to make internal functions more efficient. The middleware platform promoted efficiency within the banking segment by reducing cost and improving competitiveness. Since methods of banking have become more digitalized, there is a huge focus on creating a more efficient service for customers, producing more methods of advancement in a more user-friendly service. The benefit that digital banking has offered is cost saving. Automating banks' business function is the key factor to cut costs since it replaces redundant manual labor and human error. Traditional bank processing is costly, slow, and prone to human error. Performing the traditional banking method means that many costs are incurred, including labor, paperwork, space, and utilities. These costs can easily be reduced by offering banks' products through a digital platform. Another benefit is that digital banking has increased accuracy. So, errors come with reduced customer satisfaction, reduced productivity, which affect the bank's overall performance. Coupled with the lack of IT integration between branches and bank office personnel, this problem reduces business efficiency. So, by simplifying the verification process, it's easier to implement IT solutions with business softwares, leading to more accurate accounting. Financial accuracy is crucial for banks to comply with government regulations. Another Another benefit is that digital banking improved competitiveness. Digital solutions allow banks to reach broader markets and build stronger customer satisfaction through the CRM, which is Customer Relationship Management. CRM platforms can track customer history and provide quick access to email and other forms of online communication. It's effective for executing customer rewards programs that can improve loyalty and satisfaction. Banks keep records of quality of their customer, which can help them take strategic decisions in the future. As we discussed in the course, that customers are rated based on their quality. And for instance, that digital solutions critically categorizes customers based on relevant factors. And accordingly decide whether the customer is eligible to take out loans or not, and to what extent. This can help reduce the default risk that occur because of bad loans and force banks to dedicate huge amount of their funds to the loan loss provisions. When the bank achieves this high level of stability, customers can trust their money with the bank safely and become loyal to it on the long run. In return, the bank keeps a competitive edge and has trusted and non-risky customers. Another benefit is that digital banking has offered great agility. And what do I mean by great agility? Is that customer can easily access their information on spot using real time. The use of automation can speed up business processes, which can improve customer satisfaction. The real-time data, categorized as one of the benefits in digital banking, can offer customers with on-spot access to financial information and grant banks executives with up-to-date, reliable information so they can make better decisions, reduce their costs, and improve organizational efficiency. So, for example, following the financial crisis of 2008, a huge emphasis was placed on risk management. And hiring risk management personnel can not only be costly but also ineffective in predicting future risk. So there are a couple of softwares that offer risk management that are designed in a way that predict future results and offer recommendations for banks to respond to market changes more quickly than any professional. Another benefit that digital banking offers is that it allows customers to access their information and account history and transactions anywhere, making protection incredibly easy and having access to regularly check accounts that prevent fraud risks. Financial institutions are highly vulnerable to experience fraud risk if secure measures are not placed. So the bank can benefit from extra layer of security software system to protect data. Finally, the last benefit is that digital banking offers data management. With online banking comes an ease in the collection of customer data. It has promoted banks to better manage their information system and record valid data. When banks have a good data quality, they can ensure a better customer relationship management, which would simultaneously enhance the bank's performance.
On the other hand, e-banking is part of the banking system and has some risks associated to it. First, there is an operational risk in using e-banking, as the level of operational risk in any institution is affected by the complexity of its transactions and the services it offers. So the risk of the processing errors or system disruptions increase after implementing complex electronic banking systems that target to serve the customers 24/7. Security risk. Security risk arises from the unauthorized access to a bank's critical information. A breach in the system might cause financial loss and the damage of information that can turn the customer away. For electronic banking, data storage in web servers or in banks' internal systems are vulnerable to corruption if not properly isolated with firewalls from the internet. System design risk. Appropriate system design and control is an appropriate and important factor in managing various kinds of operational and security risks. If the system isn't well designed and implemented, the bank would be exposed to the risk of interruption or slowdown of its electronic banking services, as the system chosen doesn't match the client's requirements. Reputational risk is the risk of getting a public negative opinion which may result in the loss of customers or funding. There is no direct factor that leads to reputational risk because the existence of any other risk factor can automatically lead to this risk. No investor or customer will be happy to deposit his money or her money in a place where it's well known for a high risk in a particular area. Then we have the money laundering risk, which is the practice of engaging in financial transactions in order to conceal the identity or source of the money. As e-banking transactions are conducted remotely, banks may find it difficult to apply traditional methods for detecting and protecting the bank against criminal activities. To avoid this, banks need to design proper customer identification security checks to make sure that there are enough information to detect the transaction and the person responsible for it. Finally, we have the legal risk. Legal risks are directly related to the electronic banking as they increase when its use is extended. The main risk is due to the uncertainty that exists in the regulative framework concerning the electronic banking. In most countries, an explicit regulating framework doesn't exist due to the little experience regarding the electronic banking sector. So the risk increases as there is no unified code of conduct for electronic banking, giving the freedom for banks to function on their own and increasing the risk factor.
We were then able to conduct an interview with Mr. Ahmed, Head of Asset Management in CIB, in order to further understand the process of e-banking and to gain more insights on its implications on the bank in terms of customers' benefits, the services that they offer, the security measurements, and its limitations. Starting with the customer benefits, the bank is trying to support the transition to a cashless society, meaning that they're trying to make the customers able to conduct transactions like transferring money and settling their credit card statements without holding a lot of cash. Also, e-banking allows the customers to keep track of their transactions and adjust them when they can or whenever they want, which proves its efficiency while at the same time decreases the time involved in performing the routine banking activities. In order to ensure that the customer service is maintained and that the customers are satisfied with e-banking, the banks allows the customers to test it and show them how it works. Also, a digital banking team is assigned for the prime users of e-banking as an added value for consultation, which also makes the customers more attracted to the service. Moving on to the services that e-banking offers. E-banking offers services to both parties, individual and the corporate level. For the individuals, CIB offers smart wallet apps that can be used for everyday payments, like paying bills, transferring or withdrawing money. It can also be used to purchase goods online or for merchants, any retails. Also, issuing debit cards and credit card payments are also come as benefits from the internet banking for the customers. As for the corporate level, e-banking helps in facilitating the processes of trade finance, supply chain services, and cash online. Trade finance mainly focus on the imports and export services aimed to ease the trade transactions. This includes letters of credits, letters of guarantees, import and export collection. So the process starts where the customers are allowed to upload the documents, fill the forms, and submit it on the system, which then goes to the authorizer for approval. After being approved, the authorizer transfers the process to the bank and to the digital team in order to ensure consistency and ease the process of implementation. When the transaction is completed, the customers are notified via the app and then the transaction is done. Supply Chain Finance Service is another platform that CIB offers in order to support the liquidity and working capital needs for both the buyers and the suppliers.
So they try to facilitate their lending facilities by offering early payments, value adding financing services, and opening payment assurance. Cash Online is an automation of the corporate's manual transactions, which includes the transfers and the collection of checks or physical money with guaranteed cheaper fees and charges. As for the security measures, CIB has been trying to make e-banking more safe by offering a robust multi-layer security. So, at the early phases of adoption, each transaction was only confirmed upon calling the customer and receiving a verbal confirmation. Also, they adopted a one-time generated password authentication, which is called the OTP, that allows the customers to securely perform third-party transfers to ensure high security standards. Moreover, the internet banking sessions are automatically terminated after 5 minutes of no user activity in order to prevent any unauthorized access. As for the limitations, internet connection and the know-how came as major struggles for the users of e-banking. So due to overloading, sometimes the system shuts down in the middle of the process, which requires the customers to visit the branch immediately. Also, some people refuse to learn the literacy of conducting electronic banking transactions. When the CIB first introduced digital banking in 2003, the customers were unable to download the files with large sizes to the app, so they either had to shrink or resize the files, for which the customers had difficulty with at the beginning. Also, with the prevalence of keyloggers, it's natural for people to be concerned with the security of their identity, their funds, and their banking transactions, even though CIB have been trying to make sure or to ensure their customers that it's still considered a safe service. But what is it for the bank? The bank is trying to rely increasingly on e-banking as a cost-cutting measure and a way to reduce the average waiting time and the demand for the branches. They are trying to attract more customers to use the system by reducing the online fees and giving offers and membership incentives. Also, the bank is trying to enforce a recharge penalty for the customers who visit the banks rather than using the ATM in order to encourage them to visit the branches less often and use alternative methods like e-banking.
Based on the data collected from our literature review and the interview conducted, we concluded that e-banking is a rising service that tends to benefit both the customers and the bank. The customer's main benefits are to save the effort and time of waiting in the physical branches of the bank to get any transaction done, and at the same time, the customer can customize any of his or her orders more flexibly as the cycle is now digital rather than the normal paperwork that is resilient and hardly altered. On the other side, the bank invests in e-banking as it is a method to attract new customers to the bank, and it helps them in cutting many costs as the internet service will make up for the function of the physical branch with all its expenses and stuff. However, e-banking is a new emerging service that has no international legal boundaries to control, which gives the freedom for each institution to apply its own rules with no unified code for all online banking services. Every bank will execute on its own terms, leading to an imminent appearance of any of the risk factors mentioned that will harm both the customer and the bank and can outweigh the benefits and advantages of the electronic banking service.